Good afternoon, good evening, and welcome to the Accendo Traders Group. This is the weekend wrap-up report for August 24, 2008. AccendoTraders.com, effective video trade plans delivered daily. Each day, we go through our routines, our trade to execute our trade plan and make sure that we're on the right side of our trades. And we do that by reviewing the news of the day and checking out what's going on in our earnings calendar. And on the weekend, we add things like looking at blogs and checking sectors to see where money's going in and out of. We always scan for new trades, set alerts for those new trades, and most importantly, we want to make sure we have time to spend with our families. So this week, with news and what happened, it really was a blah week. Really not much that happened. As you can see, the Dow and the NASDAQ and the S&P 500 basically all ended down for the week, but nothing traumatic. I mean, down 37 for the Dow, that's nothing. So, it was really a consolidation week. But what's really interesting to me is this. Where did the volume go? Where has the volume gone for the month of August? Take a look at this. When you look at the volume, and basically here's the beginning of August right here, and just look at the volume just trending down. And also, if you correlate that, look at what's going on with the chart. When we start consolidating, the chart just kind of consolidating. You can see we trended down, we started to bounce, and then as the volume went down, the chart shows us that we're really not doing anything. There's really not a lot of conviction going on. Let me minimize that. So 3 out of the 5 sessions with regards to volume were below 1 billion shares. With Friday was our biggest gain as far as points. However, it was also the lightest volume for the week. Obviously, you can see the energy sector still is weak, and then we had the finance sector still bringing some cause of concern. There was, what's going to happen to Freddie Mac and Fannie Mae? Is the U.S. Treasury going to have to save them yet again? You had Warren Buffett coming out and saying basically they're too big to let fail. So certainly some concerns over the financial sector. You had some concerns over Lehman Brothers also, whether or not they're going to fail. Is Lehman Brothers going to be the next, Bear Stearns? And then there was some Asian company or Korean company that's talking about purchasing Lehman Brothers. Kind of interesting. We had HP give out skid earnings. Warren Buffett came out and said that the stocks look better than they did a year ago. He also said that he's no longer shorting the dollar. So that all happened on Friday. Another reason why Friday was a good day. And so also, because he said that about the dollar, you saw oil kind of dropped off of that news. And then we had some retailers provide good earnings reports. But overall, you can see we really didn't have that much going on, even with this. Not much going on. The big news was Warren Buffett coming out, the what do they call him, the Oracle from Omaha, coming out and saying basically he feels better about the stock market now than a year ago. Not much going on next week that really catches your eyes, but do see that we had the FOMC minutes on Tuesday, so there could be a vocabulary change, a language change that could move the market. And as initial claims keep rising, that could have some impact. But again, the question is, where's the volume? Where is the conviction with this market? Tomorrow, we don't have much going on except we have existing home sales, no earnings. This week, we do have Sears Holding, Dell, and Novell, but they're not until the end of the week, so there's no real big earnings coming up the first couple days. And here are the earning split plays that we're looking at. So tomorrow, we got existing home sales, and again, we'll see if we can get some conviction from the traders. For those of us who are loyal watchers, first of all, thank you. Know that what I usually do here is talk about what sectors are trending up and what sectors are trending down, and then we go into, of those sectors, what are some stocks to look at. But again, to represent our theme of where did the volume go, I mean, look at agriculture here. Where did it go? So this week, I'm not going bullish bearish. I'm just going to pull out some charts to talk about and, as always, make your own determination. And this is the first one. Agriculture came up here to the 50. And, could be falling back. We're not sure here. One thing to talk about that, when you see stocks normally come up and test the 50 moving average or test the moving average, if it fails, tested the 50 moving average, breaks to new low. Tested the 50 moving average, breaks to new low. So if we're going to break, we may break to some new lows here on these charts. You're going to see the same thing here on energy. What's it going to do? Could go either way. Definitely want to be bracket trading these. We want to be prepared for them to go up and we want to be prepared for them to go down. Look at metals. Failing at the 20. Each time we came to the 20, broke to new lows. So we want to be prepared for all of these. Same thing with steel. Same thing here with gold. Got to be prepared for whichever way the market wants to go. But if we're going to go lower, we're probably going to break to new lows. And we're going to talk about that when we get to our commentaries to tell you what some of the people are saying about the market. Here's drugs, possibly finding support at the 50 moving average. Biotechs, possibly finding some support. These are the only charts that really caught my eye. For the most part, the rest of these, here's aerospace. I don't know what that's going to do. Here's retail. What's that going to do? I don't know. Don't know. And our computers and software, what are they going to do? I don't know. So I'm not proclaiming. That's why this is more about being able to bracket trade which way they go, and see what conviction the market's going to give us this week. But let's talk about a couple stocks that really are beating the market. Okay, so let's go to the education portion of our video as we end our trade plan for the week. And we're going back to the statistics of trading, and this guy from Berkeley, Odian, some more statistics that we've been sharing. And so this one we're talking about, first of all, we're talking about investment clubs. And basically his study found that the majority of investment clubs, 60%, actually underperformed the market. And that on average, the investment clubs actually underperform what the individuals of that club did as reference to their performance. So in the end, he thought that investment clubs have a purpose, a good place for people to come together, but overall, they do not beat the market. And, I've shared frequently about being a part of groups, clubs, whatever you want to call them, and they're really good in the beginning, but then if you have a negative trade or something goes wrong, or if you're following a guru, that negative attitude sort of permeates the group, and they're not able to function properly. So I think they're good, and I think there's nothing wrong with being a part of them. But again, you need to have your own trade plan. You need to have your own rules for how you're trading, and not let other people, make your decisions for you. Include them as a part of your decisions, sure. Make them your decision, no. And finally, he did another study talking about once burned, twice shy, the repurchase of stocks previously sold. And he had 3 basic points. First, why do people repurchase stocks that they sold for a previous gain? And that's straight, trading his own emotional trading there. They repurchase stocks that they sold for a gain because it previously brought a good feeling. Why buy a stock that you sold for a loss? That gave you a negative feeling. So let's repurchase our winners because it made us feel warm and fuzzy inside. Secondly, he talked about, why do they repurchase stocks that they have lost value subsequent to the prior sale? And here, it basically comes down to the repurchasing a stock because they realized that had they just held on to that stock, they would have been able to sell it for more versus, instead of selling it at a previous point. So, they're looking to relive what is done for them before, and also they're trying to relive the fact that they should have just held on to begin with. Finally, they're looking at purchasing additional stocks that have lost value subsequent to being purchased. And this is where they're aware that they would have been better off making a larger initial purchase when they made their sale. So, why didn't I buy 1,000 shares instead of 500? Again, all of this bottom part, and even the top part, is about emotional trading. If you don't have a trade plan and routines in place that are your trade plan action, you're going to fail. You have to be able to have a checklist that you go this, buy. Check 1, check 2, check 3, buy. Otherwise, you're just going to go up and down with the market. So to get the full version, you can either get the podcast or you can go to my blog and get the full version, but the podcast is the first full version that gets put up there. If you're ready to become a full member and get our daily video trade plans, this is a link here, AccendoTraders/video HTML. And again, we always appreciate your feedback. So at this time, I want to wish everybody happy trading, trade at your own risk, and I will see you next time.